Hello and welcome. I'm on page 142 of your course back, and this final lecture video for chapter 6 we'll be doing some additional practice problems, okay? So let's look at this first one. I'm going to do this first one with you, and then the two on page 143 I will let you do, all right? So a monitor company uses LIFO for valuing its ending inventory. The following financial statement information is available for the first year of operation. We have our sales, cost of goods sold, gross profit, our operating expenses, and then income before taxes, okay? So Monitor's ending inventory using LIFO was $8,200. Monitor's account that had the company use FIFO, the ending inventory would have been $8,500, which is higher, right? Which would make sense because with FIFO, the most recent inventory is assigned to, or the most recent purchases, sorry, is assigned to ending inventory. Remember, the inventory that we acquire first, with first in, first out, goes to cost of goods sold. And so then the most recent inventory would then go to, most recent purchases would go to ending inventory. All right? So you would expect that ending inventory would be higher. All right? Determine what the income before taxes would have been had Monitor used FIFO rather than LIFO. Okay, so let's look at this for a second. So we can come over here and we can back into figuring out what our, well, let me draw this diagram. Then we got beginning inventory plus purchase comes down into merchandise available for sale, and then that comes over here to ending, and then the cost of goods sold. Now, we know this number, right? It's right over here. And then we know this number, it's right here. And this is using LIFO. So can we figure out what this number is? Yeah, we can figure that out, right? So we can say our merchandise available for sale will be equal to our 23,000 plus our 8,200, which equals our 31,200. Okay? Now, why did I do this? Because what I want to do is I want to redo this income statement. I'm going to do it the long way. I'm going to redo this income statement using FIFO. Okay, so I want to figure out what cost of goods sold would have been if we used FIFO, and then figure out income from there. So I'm going to come down here and say A. So we're going to redo this income statement. This is like LIFO up here. We're going to redo it with FIFO. So sales stay the same at 50,000. Now, what is cost of goods sold, though? So cost of goods sold, if I come over here and I say 31,200, which is my merchandise available for sale, 31,200, that doesn't change whether I use LIFO or FIFO, because that's just my beginning plus purchases, so that doesn't change. So what I can do is then say, if I'm trying to figure out cost of goods sold using FIFO, I can say my merchandise available for sale, 31,200, minus my ending inventory. That equals my cost of goods sold because it either goes there or it goes there. Minus my 8,500, which equals my 22,700 cost of goods sold. Cost of goods sold, 22,700. That means our gross profit will be higher. Okay, gross profit will be higher. It's 27,300. And look at the $300 difference. Difference in ending inventory right there. Okay. So then we have our expenses. They stay the same. 13,000 from right up there. And then we have our income before taxes. I'll just write income. 27,300 minus the 13,000. It's 14,300. It's $300 higher. Okay. Under LIFO than it is under FIFO. And this makes sense, right? Because remember, with prices are rising, when prices are rising, we would expect, right, a higher cost of goods sold under LIFO than we would under FIFO. Why? Because remember, the oldest or the most recent purchases of inventory will be assigned to cost of goods sold with LIFO. But remember, with FIFO, it's those older purchases, right, that are assigned to cost of goods sold because it mimics the physical flow of inventory. So that's why cost of goods sold right over here is higher under LIFO than it is under FIFO. Okay? All right. So, and then that flows down here to gross profit. Look at gross profit under LIFO is 27,000. Under here it's 27,300. Now again, why would they like to use LIFO? Well, look at net income is lower by $300. So let's talk about this. The taxes. That's why. Because it reduces their taxes. Right? So if you come over here and you say part B, what's the difference in net income? Is $300. The tax rate is 30% times 0.3, which gives us our $90 difference in taxes. All right? So you're going to pay less taxes here than you will here by $90. So you save $90 in taxes. So if they wanted to lower the amount of taxes that they paid, which one would they use? See? LIFO. Because lower net income. Lower net income, 30% tax rate times a lower number, which means you pay lower taxes. All right? That's why a lot of companies like to use it. All right. So let's look at 143, page 143 right over here. And I'm going to pause the lecture video, and I want you to do these two problems, and then we'll come back and check it. Okay? Okay, hello and welcome. So let's see how you did. So number 166, use the information given below to prepare journal entries to record March 16th sale. I went ahead and did all the journal entries here so we can see on the first one, on January 1st, we purchased 100 units at $10 a unit. February 5th, we purchased 60 units at $12 a unit. And then March 16th, we sold 40 units at $16 a unit on the 16th. We're using FIFO, okay? So on January 1st, the journal entry is debit merchandise inventory, credit accounts payable. We weren't told they were purchased on credit, but I just went ahead and assumed that. So I just said credit accounts payable. If it had said paid cash, then we would credit cash. Okay. On the 5th, we purchased another 60 units at $12 a unit. Again, same thing, debit merchandise inventory, credit accounts payable. And on March 16th, we sold 40 units for $16 a unit. That $16 is the price. So the 40 times the 16 gives us the debit to cash is $640. And again, I'm assuming that they sold it for cash. If you debited accounts receivable, that's fine too. For $640, credit sales $640. And then we also have to debit cost of goods sold and credit merchandise inventory because we're assuming a perpetual inventory accounting system. And so since we're using FIFO, we sold all those 40 units at the cost of $10 a unit. So that's 40 times the 10 gives us 400. That's why it's a debit to cost of goods sold for 400, credit merchandise inventory for 400. And then this last one here on page 143 is lower cost or market. And then I went ahead and did the journal entry as well. So I had to calculate total cost and then total lower cost of market. So here I have my 100 units available for product 849 at a cost of 10, market 11. 100 times the 10 gives me total cost of 1,000. Which one do I choose? I choose the cost because the cost of $10 is lower than the market. So total LCM over here is 1,000. Okay. Product 842, 75 units available. Cost is 16. Market is 14. That means total cost is 1,200. But then which one's lower? The market. So the 75 times the 14 gives me the 1,050. So I choose the 1,050 for my LCM, not the 1,200 because it's lower. Product 847, 60 units available. Cost is 14. Market is 13. Total cost 14 times the 60 is 840. And then 60 times the 13 gives me the 780. Which one's lower? The 780. So that's one I choose for my LCM calculations. And then the final product 860, units available is 840. Cost is 16. Market is 20. Total cost would be the 40 times the 16. That's 640. Which one's lower cost? So my LCM is 640. When I add up all those numbers for total costs, I get a total cost equal to 3,680. When I add up all my total LCM, I get a total LCM, lower cost of market, of 3,470. The difference is $210. Remember, what's on the balance sheet right now for merchandise inventory before I do my journal entry is 3,680. But I need it to be 3,470 because I have to report it either the lower of the cost or market, and we can see it should be 3,470. So I need to reduce merchandise inventory by $210. So my journal entry is debit cost goods sold 210, credit merchandise inventory 210. Okay. I hope that makes sense, and I hope you got those right. If you have any questions, please let me know. This is the end of the lecture video. Take care. Bye.